The way this new journal entry system works is it takes a general ledger, which in this case has about 1 million records in it, and it will summarize it in a variety of ways. I mean, one thing that it does first off is it figures out the journal entry and then the first 50 account postings to the debit, so that goes for 50, and then the first 50 credits that are associated with that journal entry. And it also gives you some other, odds and ends down here, like the total value of the entry, the income statement impact, which is basically, revenue minus expense for anything in that journal entry. And it does this interesting thing. It actually creates an account sequence number, and we're going to talk about that in a second. So going over to now the account sequence file, what we're showing here is a summary of those journal entries by account sequence. And notice that account sequence number 1 is here. What's really interesting when you start to kind of summarize data, and I'm going to show this to you in a stratification here, is that out of the 159,000 journal entries, that's making up the about 1 million transactions. So these 1 million transactions are made up into this number of journal entries, about 159,000. But there's only 3,000 or so account sequences that work within the journals. So when you summarize the journals down based on the debits and credits that are in those journals, there's only 3,000 to look at. Now 3,000 is still a lot to look at, but out of 1 million entries or 1 million transactions, to bring it down to 3,000 that quickly is very, very useful. And we'll show you why. Let's take a look now at this strata right here, which is how many journal entries have an account sequence, in this case, that have over 500 journal entries that have that same account sequence. So there are about 50 journal entries, only making up, in essence, of the account sequences, about 1 or 2% of the account sequence, making up about 75% of the journal entries, and about 55% of all of the transactions in the general ledger. So, about 580,000 transactions you can actually review if you look at those 50 account sequences. And this gives you some other information over here about the value that you'd be looking at. So there's a way to stratify your sampling and of course focus on those journal entries that occur a lot, repetitive, that really don't make up a lot of journal entries, 50 of them, but yet give you 75 or 55% coverage of the transactions and 75% of the actual journal entries. So you could almost say I've looked at 75% of the journal entries by just looking at these 50 journal entries over here, and that would be about 121,000 journal entries that you're looking at in the 50. Okay, so what you could do though is stratify sample and take a look, how many journal entries have a unique account sequence. And what I find interesting is that there's about 55% of your journal entries are totally unique. You've never created them before, and they have a very odd sequence to them. And they do make up a fair amount of the total transactions, but not that many of the transactions in relation to some of the larger ones. And from an amount point of view, it makes up about half of the value. So these unique account sequences is something to look at. What I would probably suggest is looking at the larger ones, looking at ones that have a high income statement impact, etc. Then from 2 to 9 I would also create a sample, but because this isn't affecting the value, the number of transactions, even the number of journals as much as kind of the 1 and the greater than 500, I would probably spend less time looking at that particular band. And then, taking a look at the 10 to 500 in this case, I probably would spend a little bit more time in here, identifying some some journal entries. Again, there are about 33,000 journal entries to look at in this band, but they only come down to 488 account sequences, and you might want to look for the ones that are large or have a large income statement impact. But if you did that and you stratified sampled across the 1, the 2 through 9, the 10 to 500, the 500 and up, you're only going to be selecting about 100 journal entries, but you're going to get coverage of your total journal entry transactions, the amounts, the journals. You're probably going to get about 80 or 90% coverage of not only the transactions, but really those transactions that are more risky, and especially taking a look at unique journal entries that tend to be more of a risky area. You could then focus in on what are the unique journal entries that impact the income statement or have a large amount to them or hit accounts that you're most interested in. So in order to pull that sample, you're going to go into ACL, take a look at the account sequences all table, which is going to tell you which account sequences has that many journal entries, that much income statement effect, that many transactions. So this would be the million transactions here. This would be the actual number of journal entries that relate to that account sequence. So these are the ones that, this first one being a unique journal entry. This account sequence does not show up ever again. And then this one here, where there's 24,000 of this account sequence, 1802. Again, it's really just an accounting, but let's take a look here. It's probably just a debit and a credit. Yeah, so it's a credit to 10081 and a debit to 3,000. So taking a look into that, one way you might want to look further into that is to take a look at the information in more of a vertical fashion. So what you could do is take a look for accounts 30,000 and 10,0081, and that would bring that up in this particular format here. This might be a little bit easier to kind of show it to you in this area. Or you might want to take a look at it in that flattened journal entry approach, where you have the journal entry and you have the account sequence and then the information over here. So you could look up that account sequence number that we just saw a minute ago in the journal entries here, and then pick the one that most is interesting to you. One last consideration is actually to calculate a transactional score based on a list of reports that would look strange. So round dollar journal entries, weekend journal entries. Let's calculate a score based on all of those factors, and that could be what you're also sorting this final journal entry list or account sequence list by. You could actually create a transactional score for each account sequence if you'd like, and then that would tell you for those account sequences how much is that showing up on the scoring reporting that we're running here. And again, you could create a single score for every account sequence. You could then summarize that by account sequence, by journal entry number, and maybe even by enterer to understand more about the particular journal entry and that account sequence. But again, this is something to consider as well as a final thought in building a best sample, 100 units, let's say, that would get you coverage of your entire population.